Assalamu alaikum and a very good morning to all our valued investors and listeners. Welcome to the Stock Sense Morning Brief. I'm Malik and it's Monday, December 1st, 2025. Today, we're dissecting the Pakistan Stock Exchange's performance from the close of last week, bringing you key insights, sector movements, corporate updates, and the economic news shaping our investment landscape. Did the market maintain its bullish stride into the weekend, and what does the week ahead hold? Let's dive in. The KSE-100 index certainly closed last week on a high note. On Friday, November 28th, the index continued its impressive upward momentum, settling at 166,678 points. That's a solid gain of 1,304 points, or about 0.8% from its previous close. It was a positive day overall, with 238 advances comfortably outperforming 199 decliners, while 41 stocks remained unchanged. Market participation was robust, with total traded volume reaching nearly 296 million shares and a total traded value of approximately 40 billion rupees. To put Friday's performance in context, let's quickly look at Thursday, November 27th. The KSE-100 closed that day at 165,373 points, marking an even more significant jump of 2,185 points or 1.3%. Thursday's volume was around 175 million shares. So, while Friday saw a slightly smaller percentage gain, the substantial increase in traded volume compared to Thursday signals growing investor participation and conviction in the market's current direction, which is a very encouraging sign. Turning our attention to the sectors that made the biggest impact on Friday, the oil and gas exploration companies provided a notable positive push. This sector contributed positively by about 0.18% to the index, reflecting sustained investor interest in energy plays. However, two sectors exerted some downward pressure. The automobile assembler sector had the most significant negative impact, pulling the market down by approximately 0.21%. The fertilizer sector also contributed negatively, with a market impact of around 0.13%. These movements underscore specific areas of strength and weakness within the broader market. From a technical standpoint, the outlook for the KSE-100 index appears largely bullish. Our daily technical analysis from TradingView reveals that the vast majority of moving averages across various timeframes are signaling a buy action. This widespread positive sentiment from these key indicators suggests underlying strength. Looking at pivot points, the index is currently trading above its classic pivot point of 162,649. For upside resistance, investors should watch the first classic resistance level, R1, which sits at around 169,000 points. On the support side, the first classic support level, S1, is around 155,000 points. Overall, the technical indicators suggest a strong positive bias, with the index comfortably positioned above its short-term support levels. In corporate news, investors should keep a close watch on Airlink Communication Limited. Their board is scheduled to meet today, December 1st, to consider matters other than financial results. While not directly about earnings, such meetings can often lead to significant strategic announcements, new projects, or policy changes that could impact the company's future trajectory. There are no companies for which today is the last day of entitlement for distributions, so investors don't need to rush for any specific ex-dividend dates today. On the macro front, we're seeing a mixed bag of economic signals. On the positive side, the government is actively working to boost bilateral economic ties, with Pakistan reportedly sharing a list of 250 business houses with Egypt to enhance trade. This proactive diplomacy could unlock new export avenues and attract foreign investment. Additionally, there's good news for logistics, as cargo shipments are reportedly getting smoother at the Azak Hill dry port, which should improve supply chain efficiency for both importers and exporters. This positive sentiment was also reflected in the PSX itself, which settled above 160,000 points in November, driven by improving macro indicators and institutional buying. However, challenges persist. The prolonged Afghan border closure continues to choke crucial exports, particularly impacting sectors like cement, pharmaceutics, and fresh produce. This is leading to significant revenue losses and increased operational costs for affected companies. In other news, the recent seizure of around 1 billion rupees worth of contraband is a positive for legitimate businesses and the national exchequer, reducing unfair competition. OPEC's decision to hold oil output levels is a neutral development for Pakistan, as stable global oil prices help manage our import bill and inflation. Lastly, exports to North America showed only paltry growth, indicating ongoing challenges for our export-oriented industries despite some recovery in textile and clothing shipments. Now, let's examine the institutional flows for Friday, November 28th. Foreign investors, or FIP, were net sellers, offloading about $3.6 million from the market. This selling, however, was robustly absorbed by local institutions, with LIP showing net buying of roughly the same amount. Delving deeper into local activity, mutual funds were significant net buyers, adding over $5.4 million to their portfolios. Broker proprietary trading also showed strong buying, with a net inflow of nearly $2.8 million. Insurance companies and banks were also net buyers, contributing about $2.6 million and $1.2 million respectively. On the selling side, foreign corporates were net sellers of about $3.6 million, matching the overall foreign outflow, and individual investors also shared around $5.9 million. This breakdown clearly indicates that strong local institutional support played a crucial role in maintaining market stability, effectively offsetting the selling pressure from foreign corporates and individual investors. My take for today is that the Pakistan Stock Exchange is demonstrating remarkable resilience, largely underpinned by robust local institutional confidence. Despite foreign and individual selling on Friday, local mutual funds, brokers, insurance companies, and banks stepped up significantly, preventing any major correction and maintaining the bullish momentum. This local institutional confidence is a powerful signal of underlying strength and belief in the domestic market's trajectory, particularly against a backdrop of mixed economic news. While trade initiatives with Egypt and improved logistics are promising long-term positives, the immediate impact of the Afghan border closure on key export sectors remains a concern for specific companies. Investors should monitor these companies closely for potential revenue and profitability headwinds. The market's ability to settle above 160,000 points in November despite these challenges suggests that positive domestic cues and the expectation of continued economic stabilization are currently outweighing external pressures. Looking ahead, the upcoming Monetary Policy Committee on December 15th will be a critical event. Should the MPC decide to maintain interest rates, it could further bolster investor sentiment, especially in growth-oriented sectors. Conversely, any unexpected shifts could introduce volatility. For now, the technical picture remains strong, and local institutional buying suggests that dips might be viewed as buying opportunities. And that wraps up our Stock Sense morning brief for Monday, December 1st. Thank you for tuning in. We hope this update equips you with the insights needed to navigate the market with confidence. Stay informed, stay ahead. This is Malik.